Good afternoon, everyone. Thank you for joining us today, and to the AIM Summit organizers, thank you for hosting us. It's great to be here today, especially right after lunch. I'm sure all of you have a lot of energy right now with us. I'm joined by a group of great panelists today to cover the topic of the VC landscape across the Middle East and North Africa. I'm going to let the panelists very quickly introduce themselves, and you'll see how we have a collective across asset classes, across stages through VC, and we'll talk about different topics throughout the afternoon.
I can't hear him.
Should I start?
ما أقدر أسمعك شو.
مش سامعني؟ هيك أحسن؟
الحين سامعك.
تفضل. Ahmed, please introduce yourself.
Thank you for inviting me. My name is Ahmed Nasser Nowais. I'm the founder and CEO of Annex Investments. Annex Investments is a second generation family office, or I am a second generation family office founder. I came, of course, from the first generation Nowais Investments, but I decided to take my own way since I was 16 years old, and I built my family office from 2011 up until now. What Annex Investment does, it does a few things, of course. It invests in early stage MENA region startups. It's also gonna launch a venture builder along with Hub 71. As well as I'm a founder myself of 8 companies, traditional and tech, which are under Annex Investments. As well as I represent and I sponsor multinational companies to the UAE, as well as startups.
Thank you, Ahmed. Ziad?
Yes, thank you very much for AIM for inviting me. My name is Ziad Makkawi. I'm the founder and CEO of EQUIAM. EQUIAM is a San Francisco-based asset manager doing things a bit differently. We are systematic data-driven, which means we apply more of a kind of quantitative approach to investing in the private markets using data, which is why we're mostly on the growth equity side. My other hat is I've been in the region for more than 20 years, so I've seen a lot. But I'm also currently involved on the investment committee of the Dubai Future District Fund, which is a fund dedicated to kind of building out the ecosystem in the region. So we invest in both direct investments across all stages, as well as different funds.
Hi, Yousef Hammad. I'm a managing partner in BECO Capital. We're an early stage tech fund focused on the region. We like to kind of focus on functional support for the portfolio, given where the region is in terms of the stage. We think there's a lot of hands-on support, so we like to think of ourselves as a firm that's doing VC, but in a PE style. We're in Fund 4 at the moment with about 600 million under management and about 60 portfolio companies, predominantly in the region.
Thank you for having me. My name is Luca Barbi. I'm general partner at STV. STV is a venture capital fund operating in the GCC and broader MENA. We focus on a growth stage. So currently we have $800 million in AUM in our first fund. We are sector agnostic. We have a portfolio of 28 companies, and there is a lot going on. I'm very happy to be here to discuss what's going on in MENA.
Thank you, everyone. And just to round off, I'm a partner at Global Ventures. We're also a regional VC firm deploying across the Middle East and Africa, predominantly around the Series A stage. And we're also sector agnostic. Similar to what Yousef touched on, I think there's a lot to be done with founders in the region in terms of value creation support, how we can be helpful and build out the ecosystem together. And I'm privileged to be joined by 4 phenomenal investors here in the region to discuss VC across the region. I'll start with the different focus on stages. So Ahmed, you mentioned that you like to invest at a very early stage, even going as far as to say you're setting up a venture builder. How are you seeing the landscape nowadays with a lot of attention coming towards the region, a lot of focus on the region? How are you seeing the very early stage landscape shaping up? Have you seen it evolve over the past couple of years?
I think luckily we've been so lucky that a lot of foreign investors has been coming here to to UAE to invest, as well as a lot of VCs have been, launched or developed since the war of, I think, Russia and Ukraine. Of course, the industry in 2022, it went a bit down because of basically the VCs. They didn't know how the market is going to be, so they wanted to calm down a bit and focus on their startups, basically maybe to be financially resilient. Now, as Annex Investments, I decided to invest 18 months ago, and I just invested in 9 companies. The reason why I started investing is because I'm also the one of the founding board members of Emirates Angels Investor Association, which is the first angel network association that is backed by the government. And so, our role here is to not only educate angel members, but also to assist the startups. So that's why I started investing. Now I'm sector agnostic, and I see the region is developing very, very good. My portfolio now in 18 months is multiplied already by 2. One of them is Alma Health. Alma Health is it's a telemedicine. Telemedicine. So basically, the founder was working in Kareem for like 5 years, and then he decided to launch the startup. Now it's multiplied by 5 already. And there is so many others. So yes, the region is developing. A lot of foreign investors are coming. I just think that when you come and you pick a startup, I think you need to do the due diligence very well on them. I think tech due diligence is important. Financial due diligence is important. And I'm a founder-focused guy, so I need to sit with the person for more than, till I know exactly if he can take decisions or not. So this is how I do it, but the region is developing very well, I think.
Thank you, Ahmed. As we move up the stages, I'm just going to jump across you, Ziad, to Yousef. Yousef, you guys gravitate mostly towards the Series A as well. There's been on latest stats, about a 35% drop in valuations at the Series A stage. How are you seeing that? How are you seeing that reflecting in your appetite to deploy? You said you're on your Fund 4. How's that shaping up?
Yeah, the investments in the region have been very tricky over the last number of years. And we kind of shifted across stages, seed and A, back and forth in terms of the concentrations between the funds. So in our first fund in 2015, Series A's were $10 million valuations. And seed were 2 to 5. Fast forward to 2021, things got out of whack, and you were doing Series A's at 100, 80 to $100 million valuations, and seeds were 20 to 50. Right now, Series A's have dropped 35%, and they keep a 20% gap between them and US Series A's. The seed is about 12% lower than US seed, so it still doesn't make a lot of sense to do seed. We still do quite a bit of seed, but kind of having the weight of a brand like BECO that's been around for 10 years and have invested in a lot of great companies to be able to negotiate an entry price that makes sense. Otherwise, a lot of the times it still doesn't make sense. So when we think about the stages that we're in, seed and A are quite busy. There are a lot of funds that are investing at that stage. We all want our right ownership, but then it filters out at Series B and C. There's a lot less capital dedicated for that, and so we keep shifting our focus between seed and A in terms of entry points to maximize output, and that really depends on the vintage and the dynamics of the market at that point in time. Right now, Series A's are great, but that wasn't the case a year ago. It was mostly seed. So right now, I think we'll continue to do a lot more A's than seeds for the time being.
Thank you. Yeah, thank you for that. And I think you've set it up perfectly for Luca. I saw him nodding as you spoke about BC and the gap there. Luca, you guys just published a bit of research that you titled Mind the Gap, which is predominantly around what's happening on the growth stage side. Do you mind talking a little bit about what you see there and the thematics?
Yes, and this is a perspective that focuses on the growth stage. We define growth stage like companies that have raised Series A and they're raising Series B, C, or D. So this is a much smaller part of the market in terms of number of companies. So in the seed, we have now more than 1,700 companies active that have been seeded by VC investors, right? And in the growth stage, we have 220 companies. But these 220 companies, they are de-risked because they eventually were able to raise a Series A, proving revenue, profitability, and scalability. And now they are 2-3 years away from the exit. So are de-risked, and for investors, it's also a shorter time to realization. Despite that, there is we see a significant lack of capital. Because most of the ecosystem in the last 5 years has developed early stage investors, but of course not growth stage investor, right? So growth stage investor is an investor that has at least a fund $300 million large and can comfortably write a check in one company of at least $30-40 million and price the company. Where are these investors? So in 2021, where the market was a lot of excitement in the market, and we may say that was inflated, we had the support of global VC investors. So investors like Sequoia, like SoftBank, like Prosus from Nasser invested, for example, in our portfolio company. And this was a big help in terms of capital and capabilities. Nowadays, those investors are not showing up anymore in our market because they have a bigger problem in their own market. So if a founder called me and say, Luca, I need to raise a Series B, to who you will recommend me in MENA? There are no names. The list of names is very short. So that's very critical, because for the success we have done the most difficult part of the job, that I think it's what you do in early stage when you start from founders. You need to create an ecosystem, bring talents, regulation, acceleration, and finance a lot of companies. This very tricky part has been done successfully in MENA, thanks to players like sitting in this table, and thanks to the help of the government. Now there is the last part that is just we need more capital, and this capital is missing. So we thought it was a good moment to ring the bell and say, hello, let's make sure we have successful exit, and we can then repeat the cycle again and make the ecosystem sustainable.
I'll come back to exits shortly, but I'm going to say, I guess one of the intros that you can make is to Ziad. Ziad, you said you're focused on the growth equity side. How are you? What do you think of what Luca just said, and how would you tackle it?
Yeah, I mean, I kind of have the benefit of being in two worlds at the same time, and one is obviously Silicon Valley, and the other one is Dubai and the region, and it gives one a great deal of perspective. I've been doing this kind of, looking. Whenever you're dealing in these two very kind of different markets, you're almost time traveling. So I always like to think about, what's going to happen here is going to be very much molded by what happened maybe even 20 years ago in the more developed markets. So if we want to talk about, the development of the whole ecosystem, from startups to growth to eventually exits and IPOs, most markets, I was in conversations with somebody today about India. There's a whole bunch of people who want to go and find the next Facebook and the next Google and discover, the next Amazon. So there's a lot of money from high net worth individuals that goes towards kind of startups. And then it becomes much more difficult to find the people who are going to want to invest bigger check sizes into bigger companies. And those tend to be more institutional companies. So we're seeing the beginning of that. Certainly, I can see it in the region. the last 6-7 months, everybody's been talking about growth. I read the report. It's an excellent one, by the way, in terms of quantifying what that gap is between, how much money is going to be needed. What's happened in the international or in the US market in particular, which is also beginning to be talked about here, is the development of a secondary market. And that's the market kind of where we play a lot in the US. Because if you can develop a secondary market, you are all of a sudden providing investors with another channel of liquidity other than having to wait for what is today still a very inefficient capital market in this part of the world. It's getting better, but it's not obviously comparable to some of the more developed markets. But there's that missing link of, how do I get to the IPO or the M&A transaction? So secondary market development, focus on growth are the two things I think that are going to be transformational over the next, let's say, 4 or 5 years. And there's a lot of people actually working on that.
Thank you. And that actually tees up the next topic I wanted to bring up very nicely. So liquidity events and exits. Yes, we're seeing more of that happening in the region now, and we are seeing a path to capital markets. I do agree that the capital markets are, on a relative basis, a little bit more nascent, but there's a lot of work and effort that's gone into it. Abu Dhabi has put a very concerted effort, and maybe Ahmed can talk to us about that shortly, but also what you're seeing in Saudi with Numu, the second exchange, if you will, akin to what we saw in London, particularly to enable tech companies to IPO, as well as what they're doing now on the Tadawul side to enable IPOs on the main board. There's a lot of movement and gravitation towards it, but I do agree that there is still that gap to get those companies to jump that stage. Abu Dhabi in specific has done a lot. You spoke about Hub 71, Ahmed, and the venture builder you want to launch there. They're working on, I guess, all ends of the spectrum, from that venture built early stage and Hub 71 all the way through to the ADX. What is your perspective on sort of Abu Dhabi as a center and what they're trying to achieve there to enable that cross stage and path to exit?
Of course, Abu Dhabi has developed in the recent years, maybe in the last 5 years, the growth was, it showed how much it developed and how much it grew. Hub 71, of course, is a very important incubator/accelerator. The reason why I'm launching a venture builder is the following. Number one, I'm a founder myself, so I find it, since I was 16, I've been finding company, testing the nature of any business, putting the right people, giving sweat equity and venturing out. And I've been doing this maybe for the 15 years. Lately, my CSO just joined, and he's the ex-CTO of G42. He built G42, as well as he built the first supercomputer in Abu Dhabi, and he co-founded AIQ. So I'm lucky to have him on board. Reason why I'm talking about him is because he has a startup, so he resigned from all of these governmental jobs, and he is focusing on his AI startup studio that is MIT fully funded. Now, I'm not gonna go into what it does, but the venture builder aspect of it is that I see a lot of startups having problems finding software engineers, finding people to do, their MVP. And the nice thing about this MIT fully funded AI startup tool that they have is that you can do the MVP in a week or 5 days, and so you have at least 50% is already done by doing so. Because let's say the MVP is not the thing that you wanted, you can scratch and do another one. So I think this aspect is very important, as well as Annex Investments. His main goal is to open doors. So I'm not like a normal VC where, I put my money and that's it. I add value in every single aspect, especially in opening doors to suppliers, banking institutions, insurance companies, you name it. And so having that software, as well as having the connections and having a marketing agency that already does design and all of this and pitch decks. So I said, why not, join Hub 71 and try to assist them with a full team that I'm hiring now to do a venture builder. I think venture builder is I don't know, in some studies is more profitable than a VC. And I myself prefer a venture builder than a VC, 100%. But I need to do it correct. Now, going to the ADX, I think it's a bit early. I think we are moving fast, but we're not that mature yet. But inshallah, we're gonna reach there.
Yeah, I think there's a concerted effort, definitely. Speaking of AI accelerators, Luca, you guys just announced a major partnership with Google. Can you tell us a little bit about why you think that's going to sort of produce conducive results for the region?
Yes, this has come as another partnership we have done with global player. The first one was with Meta. And the reason why now we come up with Google, we typically start from our portfolio company and we see what is the main pain point, how we can create value. So marketing is by far one of the highest cost item in the P&L of our portfolio company. So we say, let's do the partnership with Meta to educate our company how to use marketing more efficiently and to have discount pricing. Google replicate that, but now an emerging need of our portfolio companies is how we can utilize artificial intelligence to upscale our product and to stay ahead of the game, right? So, and then in the discussion with Google, the objective is now making Google resource and capabilities, not just hardware, but also people, to our portfolio company to develop a AI layer that could further advance the product of our portfolio company. And then this pilot eventually will become a platform available also to non-STV companies for the entire ecosystem.
Thank you. I'm going to switch tone a bit and jump to Yousef. Yousef, you guys, you said you've been around for 10 years. Obviously, you've developed a track record. You've had to get creative with exits. You've had many different approaches and ways in which you've managed to create that track record that BECO has built over the years. Can you talk to us a little bit about the evolution of the exit landscape, if you don't mind?
Yeah. Yeah. Look, I mean, it's not a secret that doing venture anywhere in the world is difficult, let alone in this part of the world where the building blocks of the funding stages are not there. And capital is very shy, right? What was that word? Capital is cowardice. And so the entrepreneurs are the biggest risk takers. Then you've got the VCs, and then you've got the LPs. That's a stack, right? From a risk appetite perspective. And so in the earlier days when we were investing, we built a strategic finance function that acted as an investment bank for our portfolio companies, because the biggest gap was growth capital. We couldn't find anyone to write a Series B check for the life of us. So that basically started building relationships with global growth investors around the world. And we would, on an average, would make 30 to 40 introductions in a Series B round to hopefully get a check. The exits used to come, initially started coming from international acquirers. We also know the biggest acquisitions, the Yahoo Maktub, the Amazon Souk, and the Uber Kareem. And once that started, that opened the floodgates for some of the local conglomerates and the local businesses like I'mar buying Namshi to start thinking, well, wait a minute, this is interesting. Let's start making some local acquisitions. The governments started to shake things up, especially Saudi, and launched Namo, which is a secondary or a SME listed market. It allows you to list without profitability. You don't need 3 years of profitability and whatnot. And Jahez went public. There, Jahez is a food app in Saudi, market cap of $2 billion. And so slowly you started to see the market from an exit perspective, whether it's international M&A, local M&A, or IPOs, either in the local market or in the global market, start to work. However, it is a process. really most VCs here that are maybe OGs and have been doing this for quite a bit of time really operate or should be operating like private equity firms. You have to handhold the companies that you invest in throughout the journey until until later stage $100, $200, $300 million checks come in, or you're able to exit them, because this is a gap and continues to be a gap in the market. So we're a lot more developed than we used to be as an ecosystem, but it's still early days, and so it is crucial to partner up with the right investors when you make an investment in this space.
Thanks, Yousef. And speaking of private equity and the emergence of multi-asset classes, Ziad, you've done a bit of everything, I guess, on that front. Can you talk to us a little bit about that, and then the emergence of, I guess, the private credit market to a certain extent, or venture debt or private debt, as also a supplementary asset class to the equity side?
Yeah, certainly. So, I mean, I think we have to kind of also put all of these conversations into context. So obviously there's a geographic context of the region, but there's also kind of a macro context. And the macro context has, I think, by far the largest impact on the development of any market. And we've entered right now into a period of where finally the open tap of liquidity that's been going on since the 1980s, literally the 1980s. So probably most people on this panel were not born yet. We are now in a period of tight monetary policy. We're in a period of, again, if you believe the experts, of higher for longer interest rates. And that's going to put a lot of strain on this industry, the VC industry, globally, and the PE industry and the buyout industry, when you can literally make 5% of, in a bank deposit. What are the returns that you're going to deliver to your LPs? What kind of returns are they going to be expecting when they've been expecting 25% returns in a world of zero interest rates? So I think there's a major reset that needs to take place that it still hasn't taken fully place in the US, and I find that we're like probably 6 to 9 months behind in terms of, you're talking about valuations, the late stage versus the early stage. I still think that there's going to be quite a bit of pain when people tell me 35% below were their last funding rounds. It makes me laugh a little bit, because in the US, in the secondary market, you're buying things at 70% discounts, 80% discounts. So that's number one. And so that creates a difficulty in funding. And the difficulty in funding for these startups means that they have to find, a lot of them are just going to die, but a lot of them are going to, the good ones are going to survive. So you're going to see a big culling of what's been going on. And they need to find alternative sources of funding, which brings us back to private credit and venture debt. So there's been an explosion, again, and it's happening everywhere, of venture debt. Why? Because I think today with venture debt, you could probably definitely, and developing markets, you can get equity-like returns with much less risk. So I see that also as being a very high growth area that a lot of people should be focused on and are focused on, not only internationally, but even here in the region.
Do you have time for a quick comment? Because I want to be provocative and also bring a bit of optimism here. Provocative, it's a question. When do you think, I'm assuming most of you, it's an asset allocator. When it was a better time to invest, in 2021 or now? I hope the answer is now, because the valuation is more reasonable, there is more space. Great. Now, 4 years ago, in our portfolio company, the average revenue of our portfolio was 10 million. Now we have 6 companies that are doing more than $100 million in revenue, and 2 are breaking even. Third data point, when we start investing, the first investment was in Karim, we divested and we sold to Uber. 5 of our portfolio companies are planning to be listed in the Saudi Stock Exchange, and they are in preparation for that. So as an investors, I think we can, follow the flow or we can look at the fundamentals. I think the fundamentals here are very conducive and are positive, and we cannot predict the future looking at the past because this region does not have a past in VC, right? So I think I want to encourage people. I see a lot of opportunity, a lot of great things have happened in this ecosystem at a speed that is unbelievable, to the point that it's also difficult to have a narration of how many things have moved. But now we need the support also of investors to believe in this asset class now.
Thank you, Luca. And that's a great way to wrap up at least our portion of the discussion today on an optimistic note. So the time is now for VC in MENA, is the long and the short of it.
Thank you, gentlemen, for this excellent discussion. And I have to say, this is probably one of the first panels in the room we had to bring in extra seats. So clearly a very popular subject. We have some time for questions from the audience. Do I have any burning questions? We can get a microphone to you. Any show of hands? None? I think the lunch is settling in nicely. Maybe we have, since we have a few minutes, 3 to 4 minutes, if you want a quick takeaways from each of you, and we can sign off the panel.
Sure. Ahmed, would you like to start? Your key takeaways?
Parting words. Your parting words from this discussion, maybe 30 seconds each.
You know, this is maybe, there's a question.
Of course, Lisandro.
Yes, question to Ziad Makkawi. Could you elaborate more what you mentioned an innovation district fund? What is this about? Is it about real estate investing in startups, or what? The concept of innovation district is very well established, but I don't know what is your translation here of the innovation district concept.
The Dubai Future District Fund is a joint venture between the DIFC and the Dubai Future Foundation. Both entities came together to committed $200 million towards building the ecosystem. The mandate is twofold. One is to generate returns for LPs, and the second one is to make sure that the ecosystem grows by actually doing direct investments and then investing in funds. So we're investors in many of the funds that are here on the panel. In addition to investing in even funds that are not directly from the GCC, but like we're looking at places like India, like Africa, where we want to draw their portfolio companies to ultimately come and establish themselves in the region and make basically the UAE a hub for all of that development.
Thank you for that
Tough
question.
negotiators,
I have another
though.
question.
So, to any of the panel members, what do you think is the future potential for locally homegrown companies started off here in Dubai and in the UAE to have a substantial global footprint? Seems like, as far as the successes are concerned, have been a lot, but these are companies that have been predominantly, it seems like, focused, which is a good thing, which is obviously the first iteration of any ecosystem, on the local ecosystem, which is fairly large if you take into account GCC and MENA region. But is there an ambition and is there an impetus to come up with concepts and ideas that can have a resonance outside over a period of time? Obviously, you need to have a foothold in the local ecosystem in other parts of the world as well. In consumer tech, obviously, but maybe if someone could elaborate on even B2B tech as well.
So look, the way I like to think is I like to look at, I think we're behind in this part of the world, so I like to kind of look at other regions as for inspiration. Let's take India as an example. India had 7 unicorns in 2014. In 2021, they had about 100. I believe it's about 60 or 70 at the moment, right? So that kind of a hockey stick growth in terms of number of unicorns. I believe, was it Zoho? It was the first that went properly global. right? And so, and once Zoho went global, you see the Zoho Mafia, which was, an HR software that was built for global businesses. The Zoho Mafia are the ones that saw, hey, this can be done. We can build out of India global businesses, and that started to circulate. You take LATAM as an example as well, which is a little bit behind in terms of the number of unicorns. They still haven't perfected that model, right? You take a look at Europe. Until SAP did what it did, it was predominantly the same. And so in terms of progression and trajectory, local is where you win initially. You have to build local. Now, why is local here very different than most other emerging markets? Because we do have a very volatile region, but we do have the GCC, which creates a very, very stable hub. We have petrodollars, we have really interesting ARPUs, and we have really cost base of delivery and servicing. And so from a unit economics perspective, and we benchmark this on food, on travel, on home items, we have the best unit economics in the world. They do not compare with any other markets. Just as an idea, Delivery Hero, the largest food delivery tech business in the world, their only profitable market is the Middle East, anchored by the GCC. And so once they're able to build and capture this region, which is has a lot of depth in terms of the size that you can build out of it, then you're going to start seeing global companies. I'm sure everyone here has in their portfolio 1 or 2 or 3 global companies came out of their region, built for the globe. Nothing to the size of Zoho yet, but it's coming. We see the initiation, but there is this gravitational pull. Every time you start thinking of building something for outside the region, the entire world is coming here to do business. Why go somewhere else when there's so much white spaces? Just think about Saudi. The tourism industry is fresh. The food industry is fresh. There's so many white spaces that you can build really large businesses without expanding yet. And so it's not that it's not there yet. It's just a matter of timing until that happens. I don't know if anybody has anything to add, but that's my personal take.
I was just going to quickly add to that, just as a journalist who started covering tech in the region almost 10 years ago, that was a question we were asking almost 7 years ago. You'll probably find a piece on WAMDA exactly about that, about what it takes for a MENA startup to go global. And there have been examples before, but I can't say that journalistically speaking, there's something that covers that holistically, even looking at, say, the last 10 years. So we have yet to, I think, see that fructify. Any other questions?
If you don't mind, can I just add a tidbit to it?
Sure.
There's the example of mobile phones. So if you go to the United States, you had mainframe PCs and then, personal computers, then laptops, and then over a period of time, mobile phones came along and then smartphones. The trajectory for anything substantial that needs to happen does not need to be based on what happened in other ecosystems. You have people in India that till date do not own a single personal computer, but they're experts on smartphones. So as soon as the mindset comes in, as the switch is there, if the support is there, I think every company and every ecosystem and people in these ecosystems have the wherewithals and the capabilities to scale their dreams at a global level. It's, in my humble opinion, a switch of the mindset and an attitude and a support that comes along with it. It can happen, in my belief system, without going through that same curve that maybe India has gone through in the past.
No, I'm not saying it is. I'm just saying if you're an entrepreneur and the entire world is coming to do business here because this is the place where the flow is being created out of over the last few years. This is one of the few places in the world that's optimistic, that keeps investing, that keeps growing, and there is a lot of white spaces, right? Saudi's opening up for the first time in its history. And so the excitement is here. And so as an entrepreneur, when you think about your opportunity cost, you would probably go to where your network is the best, your skill set is best suited, and it's here. And so in terms of, it just happens that both coincide at the same time. And I'm not saying it's not going to happen. We already have, and I'm sure everyone here has, 1 or 2 or 3 portfolio companies that have gone global. But actually, one of our portfolio companies left from the region, went to Latin America and the US, and now they just moved to Saudi. The CEO moved from San Francisco to Saudi because it's a lot more exciting. And so for this time being, this is the interesting bit. This is where things are interesting at the moment. And so the opportunity cost, because the depth in terms of talent is not as large as India or just as large as other ecosystems, most likely they're going to focus on the region. We all would love to see something go global as quickly as possible, but it's going to be the exception, not the rule in the next few years. And I hear you, yes, we can skip and not follow other trajectories, but most likely we will.
Thank you, everyone, and thank you for your question.